I'm still bullish on Bitcoin. In the fourth quarter, seasonally, Bitcoin's strong, but now we have the Fed flipping dovish after being essentially hawkish all year. That's a tailwind for Bitcoin. So I think Bitcoin gets to 200 to 250,000 by the end of the year. And that aligns with Mark Newton's technical targets. Ethereum, as a price ratio to Bitcoin, should recover to its prior, let's say, either average or at least 5-year highs, okay? Mm-hmm. Using a $250,000 Bitcoin, that implies somewhere between 10 and 12,000 for Ethereum by the end of the year.
This week in crypto has been anything but quiet. Bitcoin continues to consolidate at elevated levels, showing resilience in the face of shifting macro conditions. Meanwhile, Ethereum, despite trading far below its 2021 highs, has been quietly building momentum as institutional adoption, tokenization, and AI-driven use cases begin to accelerate. In a market where capital always chases growth, the second-largest blockchain looks increasingly positioned for a massive re-rating. And that's exactly the thesis recently shared by Tom Lee, co-founder and head of research at Fundstrat Global Advisors. Known for his contrarian calls during some of crypto's darkest days, Lee has consistently emphasized the long-term value of blockchain infrastructure. This time, he's making perhaps his boldest projection yet. Ethereum could reach $60,000 within 5 years, an 18x increase from current levels. His argument rests not on hype, but on structural changes in the economy, finance, and technology that make Ethereum a central piece of the global digital architecture. One of Lee's most compelling points is the rise of tokenization. Today, stablecoins represent just a fraction of global money markets, with around $280 billion in circulation. Compare that to the $400 trillion tied up in global assets, from equities and bonds to real estate and intellectual property. If even a fraction of that migrates on-chain, the payment rail capturing the lion's share of that value could see exponential growth. Ethereum, as the most neutral, decentralized, and widely adopted smart contract platform, is already becoming the backbone of this transformation. In other words, Ethereum's market isn't just crypto anymore, it's finance itself. And that's just one piece of Lee's bullish framework. In the conversation you're about to hear, he breaks down why Ethereum's fundamentals are stronger than ever, how Wall Street is preparing to embrace it, and why a supercycle may already be underway. So stick around. And if you're new here, make sure to hit the like button, subscribe, and drop a comment with your Ethereum price target for the next cycle. Thanks, and let's get into it.
In our view, Ethereum probably is a chain that had become underestimated. It made its all-time high 5 years ago. So when we started the treasury strategy, Ethereum was around 1,300 and its all-time high was around 4,800. But that was a case in our minds where Ethereum's fundamental story was much stronger because number one, it is the second largest blockchain. It's this largest smart contract platform. It has a huge community of developers that, in my opinion, are really benevolent focused. Ethereum is trying to improve the world. But I think people thought of it as less exciting than other platforms. But then along comes not only stablecoins, which we call the ChatGPT moment for crypto, but it's really the realization that this current administration in the US, the White House and Congress, are really becoming pro-crypto, and Wall Street itself is embracing blockchains. And the blockchain they're doing most of the work on is Ethereum. So when I look at that combined with AI and tokenized agentic AI and robots are really going to create the need for a token economy for robots. A lot of that will happen on Ethereum. In fact, President Trump today just talked about how he needs proof of human to protect us, and a lot of that work is going to be done on Ethereum. So you have two drivers for what we think are a super cycle. So to us at 1,300, Ethereum was kind of like a massive risk reward. Well, it's a big market. Stablecoins are just tokenized US dollars right now. But we're going to be seeing tokenized equities and credit and real estate and loyalty points and intellectual property intellectual property is the largest component of U.S. CapEx. That should be on-chain. So is it a $400 trillion market? And stablecoins are $280 billion right now. I think that there's room for plenty of blockchains to benefit. But I do think the idea of a fat protocol is important for people to keep in mind. That's what Union Square Ventures first wrote about. I don't know if you guys remember from 2011 or 2013, but as stablecoins are created on a layer one, that layer one captures the value. That payment rail concept is the exact same reason banks, as you put a deposit in, the value of the company actually equals your deposits because they make a loan with that deposit. So I think in many ways there'll be room for many blockchains, but the majority of this is taking place on Ethereum. Yes, and I'm not going to throw shade at any other layer ones because I do think there's room for multiple, but Ethereum is a truly neutral chain. I don't think anyone ever feels that someone's got a fat finger tilting it in their favor. If you think about how Wall Street operates, they will only want to do and operate on a neutral chain. If one of the banks creates their own layer one, calling it, I don't know, too big to fail bank layer one blockchain, no one is going to feel that's a neutral blockchain because that's going to always tilt it in their favor. I mean, that's just how Wall Street operates today. If a bank is the axe trading a bond, they have perfect information and they use that against anyone else that trades it. So I think it's important for Wall Street to find a public blockchain that's neutral, and today the biggest one is Ethereum. Yes, I think part of it is the digital asset treasury world bridges two worlds. One is crypto, because it invests and buys a token, and so you have to be able to speak the language of the crypto economy. But then the other world that treasuries sit in is public equities. And remember, there's 5,700 stocks out there, 5,700. I mean, just because a company does something doesn't mean the market cares. If you look at the stock market today, the top 30 most traded stocks are literally the only stocks that Robinhood cares about, or Schwab, or even JP Morgan. JP Morgan trading probably only cares about 10 stocks, and Goldman's desk only cares about 10 stocks. Institutional investors care about sector exposure, but they always buy the leader. So, MicroStrategy is one of the most liquid stocks in the market today. It trades $3 billion a day. Fortunately, BitMine is one of the most liquid stocks today. It trades about $3 billion a day. It trades about as much every day as JP Morgan or Arista Networks or Google. We're really one of the most liquid names. And then I learned that in Korea, we're top 1, 2, or 3 in terms of trading volume. So I think that unless you're going to break into the top 30 as a stock, institutions may not pay attention because institutions want to have volatility, access to hedging through option chains, and BitMine's a top 10 chain. And so if you're not in that zip code.
Lee starts by pointing out that Ethereum has been underestimated for years. Despite making its last all-time high back in 2021, its developer ecosystem, community strength, and role as the leading smart contract platform have only expanded. What's more, he argues that Wall Street and major institutions are beginning to standardize on Ethereum for tokenization projects, a trend that mirrors how capital markets once consolidated around a handful of trusted financial infrastructure providers. And in Lee's view, this is not a passing experiment, but the start of a multi-trillion-dollar migration. That context sets up an even bigger theme: the role of Ethereum as the new foundation for global finance. To Lee, Ethereum isn't competing with Bitcoin. It's playing a different game entirely. While Bitcoin cements itself as the world's digital reserve asset, Ethereum is building out the rails for tokenized dollars, equities, credit, and even AI-driven digital economies. This distinction is critical because it means institutions won't have to choose between Bitcoin and Ethereum. They'll need both. And that brings us directly into his discussion about Ethereum as the new Wall Street.
So Michael Saylor is a very good friend of mine. In fact, I spent a lot of time explaining to him and thinking around Ethereum and Bitcoin, and I think we agree Bitcoin and Ethereum, first of all, are friends. We don't compete. But that our strategy is very different. I'm not competing. Bitmine is not trying to get an institution to buy us over MicroStrategy. In fact, we think an institution that owns MicroStrategy also has to own Bitmine because we are different parts of the crypto economy. Ethereum, to me, is the new Wall Street. In 1971, the dollar went off the gold standard. Okay. Now, everyone thought in 1971 the play was gold. But actually, in 1971, the dollar became synthetic. It no longer was backed by anything. And that's when Wall Street stepped in and said, okay, we got to make sure that the euro, the German franc or whatever, German mark or the French franc doesn't become dominant. So Wall Street built products to make sure everyone used a synthetic dollar. Wall Street was the big play in 1971. In 2025, we're making everything synthetic. We're starting with tokenizing the dollar. And then, as you know, Wall Street's going to tokenize equities and everything I just listed. Massive opportunity. Ethereum is in a super cycle because of that. But Bitmine can play a role because it can become a payment rails. It could become almost a bank. It can help as by owning the largest holder of Ethereum today. It's a kingmaker on the DeFi. We were doing moonshots. We invested $20 million into 8Co, which is investing in the WorldCoin, and that already, in just less than 10 days, has already returned more than 10 times our investment. So I think we are becoming a financial infrastructure company. I think that it's going to be important for other Ethereum treasuries to be differentiated. I do think there's room for more than one, but the market is also picking winners and losers. Bitmine trades $3 billion a day. MicroStrategy trades $3.4 billion a day. I think the two of us represent 95% of all trading volume in the DATs. So if you look at the hundreds of DATs, the two of us are 90% of the trading volume. That means institutions really only want to buy us. In terms of total market cap, we are basically a large cap stock now. So we're going to be part of a lot of these major indices when they rebalance, which means we'll have passive flows. That really helped MicroStrategy too. And that's actually what sustains valuation premiums because now you have someone who's buying every day.
Since ETH is all about decentralization, if there does start to be diminishing returns, if someone controls too much of ETH, maybe, if it ever gets to that point, if you think that's one thing.
I've actually spoken to some researchers about this. Like, what's too much concentration? 5% is where you get a power law benefit. Not that, it starts to break down. These same researchers have actually told us that it's pretty safe to go to 10% of Ethereum. And as you know, Ethereum, no one controls it. If some entity owned 10%, and of course that entity is a permanent capital vehicle and is going to be staking and doesn't want to get slashed, so they're going to make sure they're validating properly. I'd actually think it really secures the network because now all of a sudden a DAT, by the way, is completely decentralized, right? It's owned by shareholders. Like Bitmine has 270,000 shareholders. That's actually who controls Bitmine. It's not centralized. It is actually, I'd argue, a way to ensure perpetual decentralization because now the shareholders own Bitmine. They control how the stock does, and if the stock's valuation gets weak, then the DAT loses its ability to, raise capital. So it's truly decentralized.
But how do you see this all playing out? Where does ETH go, even at the end of the year?
Well, a lot of it starts with our views on crypto, and I'm still bullish on Bitcoin. In the fourth quarter, seasonally, Bitcoin's strong. But now we have the Fed flipping dovish after being essentially hawkish all year. That's a tailwind for Bitcoin. So I think Bitcoin gets to 200 to 250,000 by the end of the year. And that aligns with Mark Newton's technical targets. Ethereum, as a price ratio to Bitcoin, should recover to its prior, let's say, either average or at least 5-year highs, okay? Using a $250,000 Bitcoin, that implies somewhere between 10 and 12,000 for Ethereum by the end of the year. But I do think Ethereum is going to exceed those prior highs, and that's why I think when we get to 12, 15,000, that's what you call, real price discovery, but I don't think that would be the ceiling for Ethereum.
I'm not saying that it's going to be straight shot in the next 5 years, but how do you kind of see it getting there?
Yeah, some perspective. In 2017, Bitcoin was under 1,000, and we thought it would get to 25,000 by 2022, but could get to 100,000 a little bit later. Of course, 8 years later, Bitcoin's over 100,000. To us, an intermediate level for Ethereum is matching Bitcoin's network value. So I think a couple years from now, so that would be 60,000 ETH.
What Lee describes here is nothing short of a financial reset. In 1971, when the US dollar left the gold standard, Wall Street stepped in to engineer the synthetic dollar system that still powers the world today. In 2025, Lee argues, a similar transition is happening, but this time, everything is being tokenized. The dollar, equities, intellectual property, and even AI-driven agents will live on-chain. And just as Wall Street was the biggest winner of the post-gold standard world, Ethereum could be the biggest winner of the tokenized economy. That's why Lee remains bullish not just on short-term price moves, but on Ethereum's long-term trajectory. By the end of this year, he sees Ethereum reclaiming the $10,000 to $12,000 range as Bitcoin pushes toward $250,000. But looking out further, his intermediate target is far more aggressive. Ethereum eventually matching Bitcoin's current network value, which would imply prices around $60,000. For investors, that's an extraordinary proposition, not just a return to prior highs, but the possibility of Ethereum commanding a market capitalization in the trillions. If that plays out, the implications ripple far beyond crypto. A $60,000 Ethereum would represent validation of decentralized finance, a reordering of global capital flows, and the mainstreaming of blockchain as financial infrastructure. It would mean that tokenization is not only real, but dominant. And it would signal that the crypto market is entering its most transformative era yet, where Bitcoin is money and Ethereum is the operating system of finance. Tom Lee has made his name by seeing the bigger picture before others, and this time he's calling for nothing less than a structural supercycle for Ethereum. The question is, how prepared are investors to position themselves for it? And leave a comment below with your thoughts on Ethereum's path to $60,000. Do you believe in the supercycle, or do you think the market is underestimating the risks? If you found this breakdown helpful, don't forget to smash the like button, subscribe for more in-depth crypto analysis. Thanks for watching, and let's see where this next phase of the crypto market takes us.